All right, my name is Medis Falajimo. I'll welcome you to PBX Market Scanner Ecosystem, and I quickly want to give you a summary. And please pay attention, don't go away. This training or introduction is all a kind of explanation. So it's going to be in 3 dimensions. First, I'm going to be telling you about just intro to market basics. That's what actually what should I know in the market. And then number two, I'm going to be showing you the importance of the PBX market scanners. And then number three, I'm going to be showing you how we actually use just navigating through and all of that. Now, our scanners actually are combinations of what we know that predominantly happen in the market. First is the structural foundation, which has to do with support and resistance that beginners need to know where is the floor and where is the roof or ceiling, as the case may be. You can see that for beginners, for swing traders and all of that is good for them. Then the second scanner build around more, at least higher level, which has to do with zones and demand and supply zones, mapping institutional orders and other block zones, demand and demand level or supply and all of that. So these are part of the thing. So which is more actually require patience and then over the first aspect. Then second, we go more advanced to people trade smart money concept. And so which has to do with a more professional way of trading and it requires larger patience. That's the truth. Every ICT trader wait for patience. Then price action, the naked chart, engulfing and all of it, just maintaining the structure in the market as much as for so-called all the market purists and energy readers. So you study to understand candlestick. And so we have something that can be indicating and show you how to go about. Then lastly, we have the psychology. Now, those of us who want to be scalping gold, cutting 50 pips, 20 pips, 30 pips within any time, and then growing small account to something massive. And that's one of the things about it. So can say scalpers and aggressive trade traders. That's those who this is actually made for. So actually the subscription is we have a 5-in-1 master bundle pricing. All right, so which you maximize edge. So each of these, they cost different prices and all of that. So you can see in their category. So each of these, if you are going for a monthly, you go to quarterly, you go to 6 month or yearly. This is the cost. But if you want to buy each of them, you're going to be buying in this same way. That means this was supposed to be times 5. That means in a year, you're talking about, in a month, you're talking about $250. You want to have all of them. Then if you want to spend $500 to have all of them. In this 150 multiplied by 5. So you're talking about how much? About $750 in all of them for 6 months. And then why this multiplied by 5, about $1,000. And that's what you are getting is like total discount of 60%, and you are just paying 40%. Okay, so we say we have grand operational rules. All right, the PBS standard rule. The first to maintain to maintain a 75 to 90% win rate, all traders must follow this non-negotiable rules. First, validation. Never take signal without high momentum confirmation. Number two, repaint protocol. Signals are only valid once the current candles closes with an engulfing and all of that. So, but let me just quickly go, I say the first segment, I'm going to be showing you the market itself. Okay, so let's go to the market. I'm going to show you something. So let me take off the scanner so that we can quickly do something in the market and show you. Now, so this is introduction to market. So I'm going to just show you the basic thing about the market so that you can align with it as simple as possible. Is that correct? Good. Now, the market is fractals. All right. So first of all, there are a few things that matter. So you can write it down. There are a few things that are very, very predominant in the market and that you must take note of. Okay. There are a few things that are very predominant in the market that you must take note of. Okay. Now, first is that market is fractals. And so things you need to know about the market is that there are two major models. Other models are available. There are two major models approaching the market. Then you can choose strategy. So strategy and model or framework are not the same thing. Now, first, we have two models in the market. So I'm going to show you. We have two models in the market. You can study other things around each of the model to help you. First, we have what we call price action model. Price action model. And then number two, now, whatever other model you are using is built on price action. That's the truth you must understand. So, but the other model is called ICT or SMC model, or we call them framework. Okay. So these are the two major models to approach the market. Okay, now, but in all this, irrespective of what you are looking at in the market, it's just that each of those segments or each of those model look at the market and rename the whole thing. So one of the predominant thing that you need to know about the market is called trend and structure. What do I call it? Trend and structure. It's applicable to irrespective of the model you are using. Trend and structure, meaning I need to understand which trend is the market. What do you mean by trend? What do you mean by structure? Structure is the sequential movement of the market from one place to another, and that create different swing point. All right. Then trend now has to do with multiples of structure in a given period for a particular direction. Now, so we now say, okay, if structure is that market move. If it's an uptrend, market move by what we call a low, a high, a low, a high. That's the textbook format, typically. That's the textbook format. That is, okay, if I have, so we now said to know that the market is in a trend going up is that you need to have the structure to have built two layers. And what do you mean by the two layers? So meaning the two layers are this. Let me just exemplify it because I don't need to let this thing to be too long. All right. So let me exemplify it. For a market to be an uptrend, then you need to have structure that is going to have two layers. Okay. So pay attention to the two layers. What do you mean by two layers? All right. The market, let's say, start from here. You know it's not going to be straight. So you move this way, come down, then do this. So this is two layers, which is like N format. So for market to be going up, it must have what? An N format. And for the market to be coming down, it must have what? It must have an N format. Sorry about that. Okay, so I'm not teaching you market, so I'm just showing you. So you need, this is the basic thing you need. So irrespective of the tool you want to use to trade the market, are you getting me now? And now one of the lovely things that each of this model, price action, SMC just a build on. It just a build on in an advanced kind of looking at the market more wider, okay, than, so I'm not going detail to say I want to teach you ICT, no, that, but just tell you the foundation and the fundamental of trading, your trading, what's it called? Your technical analysis foundation or fundamentals are built on price action, which typically you are looking at the structure. So now, so structure is inside a trend. So, but trend is defined by structure. So trend is defined by structure, while structure is inside a trend. So what we mean by this now, that we have to have two layers. So now let me just label it here. Or if you take this one, you see here now, is called low. So just call it low. That low here is a swing point. That is swing low. So it came down. This is a low. So this is a swing low. Then the market have what we call an impulsive move to create what we call high. Okay? What we call what? High. So the market created a high. So irrespective of the market you are trading, just understand that this is the structure. So this is called high. Now, we now say we need to have two layers. So that means for us to say this market is an uptrend, you need to have two layers. And what are the layers? The layers are simple. The layers are these. We take up to this point. Now, the market went up. So this up, it went to, they call it impulsive move. This one, it came down, they call it corrective move. So this is a correction. So it now become low. But there was a previous low. So that means this is higher low. Okay? This is higher low. So now, two lows, one was lower, one was higher. The presence of this give this one to be what we call protected low. Are you getting it now? This become what we call protected low. Then this is a high. This high is not yet protected until when this one have crossed it. That means this one crossing it now, this one now become what? A protected high. So any market you are doing, so the same thing. So this is what we call a structure where we have presence of a beginning to another move, to a correction, and to another move. So this is a structure. So presence of low, higher high, higher low, presence of higher high and higher low is an uptrend. So take note of that. The presence of higher high, higher low is an uptrend. The presence of higher high, higher low is an uptrend. So two layers. Then the same thing will come back here. So we can take this and go and dash them at this point. So this is just intro to the market. So we have a high. Now we now have a low. Okay, I'm not teaching you technical analysis, just to give you basics. So we now have a low. So if we have a low here, now, so the market structure, so this structure, because of the presence of a low and a high, a higher low, a higher high, had confirmed this to be an uptrend. What do you call this one? This is an uptrend. Excuse me, just a moment. So uptrend. Okay? Okay. Oh, let's go. Let's take this one. So this is an uptrend. Okay, let me take something off. Okay, uptrend. Okay, because this market now had called out from here a low, a high, a low that is higher than this, but lower than this. So now when this now happened, you see this place that this one got to before was called. Now, because the market has overpowered it, but with the body, it's now called break or structure. So this is now confirmed an uptrend. So that means this is an uptrend. So you see that people take their, trend line and just mark it to see that the market continue to go up. So the same thing. You have this one. This is a high, and this is a low. And so if this is a high, this is a low, then you have this here. Okay. So now this is a high, but this high now is just not a high, but something happened to it. Its high has lower than the previous one. So it become a lower high. Are you following now? It become a what? A lower high. So this is a lower high. Okay. Then the presence of this is a high. A new one, sometimes they call it swing failure, because this swing up here, the last that was coming from this down here, it got up here, all of a sudden went down and create another up, couldn't get to this point. They call it swing failure. That's a lower high, and then that means the market is changing. So if it has changed that one, you want this one to break. So generally that structure have changed, have broken, and then now see market have changed. So what they call it, why you are going to be reading maybe model of what's it called, smart money concept. When you are going to be learning money concept, the first break of a swing point, they now refer to it as not break of structure, but they refer to it as market structure shift, MSS, or change of character. Are you following? So I'm just giving you basics, MSS. So that means market is changing from down to up, changing. So that means, so we have an uptrend and a downtrend in the market. So you need to understand structure and trend. Then when the market now got to a place and begin to do something like this, it can even take a low higher than this a bit, take this one, begin to do this. So they refer to this as a range or sideways trend. So a trend that has refused to give us clearer direction. Where is it going to? Are you going up or you are coming down? The two most predominant tradable trend are up or down, so that you can join a party. Here, you don't know the party you are joining. You first join buyers and you join seller. Now, this is what people always tell you, that if you're a beginner, avoid a range market, a choppy market. You can hear different grammar, But the whole thing is that the market is not clearly telling us either it's going up or down. That's either we are going forward or we are going backward. Let us know. This is a stagnant water. So you can't make decision there, because when the market is going to get there, and that's why ICT trader talk about accumulation, that when the market is going to expand, it will take out people who do not know that it's called accumulation. The truth is that if you do not know if you don't know where liquidity is, you are likely going to be the liquidity. Okay, so that is the intro I want to give to you. Okay, so that's the intro I want to give to you. So we are done with the intro. So next thing you need to learn, okay, I'm done with the intro because it's coming longer. So I hope you get this intro now very well. Okay, so now let's go quickly. Okay, so now I've given you the intro. The intro has been given, and so I need to open my chart. So you can see, but by the time you get to chart, it's not going to be line, it will move. So you now need to train your eye to understand, So let me take from here. So let me take from here and take this path. Look at this. This is a low, and this is a high. Then this is a low. Then this is a high. Then this is a low. Then this one, you can't say it's a high because this is higher than it. So this is a high. Then this is a low. Then this is a high. Then this is a low. So this one is not, it's an internal structure. This one is an internal structure. So the last high is actually here. So the last two low was here. So that means, you see what happened here? This is daily time frame. The market came down here, okay, and then move up here. Now we are here. So there is a challenge here. Let me just keep this one here. So what happened here is this. This is the last high. You see this one down is called break of structure, BOS, okay? Then this one, you know that the market, the last low that this market had was here. So this is called market structure shift, MSS. Do you get it now? Why? That the market has gone up. Ordinarily, if you still having momentum to continue, it should not come and take out this, but it has closed below this. That means we have a shift in the market structure. So now the market hasn't shifted. You want it to go back and fail, of course, not to get up here. Now, so probably what they're now saying is that, okay, if the market get up here, it's going to be stopped somewhere and all of that. So some of the last candle bullish that they have here, or they call it, some take order flow entirely. I'm not teaching you market, please. I'm just giving this. They call it order flow entirely. So that's the basic thing you need to understand about the market. So that even when you are using any tool, so that means you expect this market that just keep pushing up now, you expect this market to actually what? Crash down. So when the market now come back to this point here, when it come back to this point here, and then break it, it's now called break of structure, BOS. So that's when the real structure is broken. So you can now have, this is a high, this is a low, okay? So this is a high, this is a low, and then this is a what? This is a high, this is a low, then this is what? A lower high. So the market actually need to actually take out this now again before you say the market is now confirm a downtrend. Yeah, it has shifted. It can still do and turn this one to a sweep of liquidity and move up and take out this again, right? Take out this one and take out and break. If you break this one, the market has resumed. You have to rearrange everything you think you are doing and all of that. So that's why when you are using tool, it helps you. Okay, so now let's quickly go. Now, so let me now show you the importance of our PBX scanner. So we have different scanners. So I'm going to show you one after the other, and then I'll tell you how we use it. Okay, very quickly. So we are almost wrapping up this interaction. Okay, so let me just go to some of our PBX scanner. So you can see I told you we have about how many scanners? We have about 5 bundles of scanners. All right, I told you the pricing and all of that. Now look at it. This is a scanner. Now, if you know much or not, at least the foundation I've just given to you is enough for you. Okay, just understand where is the market going to. That's what I mean by trend. Where is it going to? Is it going up or is it coming down? So you have to have an idea of where's the market going to. When you have an idea of where the market is going to, it's very fantastic. And I said something in one of my videos. I said, if you are just a beginner or an investor, a swing trader and all of that, the basic thing you need, just take notes, write it down. Say, Felix, say, as a swing trader I am, or as what type of trader are you? So as a beginner, as a swing trader, that you don't need to know too much, that these are basic things you need. Number one, you need to understand key levels. Number two, you need to understand structure, just like what I showed you now. You can see the importance because it's on structure, even just like go and ask architecture. All right, an architect in architectural work, they will talk about structure, structure, structure. Even in government, they talk about structure, structure. If you understand structure, you can have perspective of where are we going to. So okay, then you have structure. Then we have what we call swing point. It's part of price action. All right, it's part of swing point, and then you just need to understand what we call fib tools because you will now, these four things are very predominant for you. Now, if you look at this scanner now, you see this point you are seeing here is a key level. That is like a support, right? And it's a key level. And you could see that apart from you, when we're drawing this thing and all of that, you see that the market got here and got stopped, and then you could actually find a buy. Just show you that, okay? Because you now understood what structure. So this is key level. Key level are very important. Point at which that it can be hybrid of demand supply zone and then stop loss. What is it called? Support and resistance. So you can see how the market actually collapsed here and then pump up and all of that. So these are rejection. You can see these are key levels. We have an upper one. Then this one still showed. Hey, come down. Hey, don't go anywhere. You understand? So you can use it to trade and make money. So this is one of our scanner. You can trade. One of the lovely thing about our scanner is that you can trade in any time frame. You get that? Any time frame. And you can trade with our scanner, you can trade any instrument at all. Can you see that? This is accumulation. So now, ordinarily, no professional trader want to trade this range. Can you see now? For the past, today is about 18th of February. Since on the 11th of February, this market have been struggling within this range. Do you understand? So that's another thing. Then if you have the proper tool, you can be scalping and making money there. But you say, oh, professional trader says it's quite dangerous, where you cannot decide where is this market going to. You're going to be in a bottle and struggle. So you can see that this is scanner, powerful scanners that can trade any instrument. Now, this is Forex. Now, let me switch into crypto. You're still going to find the same thing, the same pattern to look at. You go to gold, you're going to, okay, let's look at gold. Look at gold, all right? Let's look at the gold. You still have the same pattern. Can you see that? You still have the same pattern. Look at the rejection. So you wish you have this type of scanner. Is that true? You wish you have it because we'll have been giving you buying, and then you won't be afraid of the market anyhow. Look at it. You wish you have this type of scanner. Am I correct? You wish you have. I mean, right? You wish you have. Somebody is listening to me. You can see now, this is the floor, this is the ceiling. So you can see the market struggling. You wish you have, right? Look at Bitcoin. So you wish you have. So Bitcoin is even below, is strong. So this one, this tiny one is that means the support is not strong. This is resistance is too strong and all of that thing. Okay. So these are some of the scanners. So irrespective of what to trade, crypto, stock, now let me pick out US 30, that is commodity indices, US 30. You can trade anything. You can trade anything. Okay? So you can trade anything. So look at it. Can you see that? Can you see now? Very fantastic. If I look at S&P 500, S&P 500, S&P 500. Can you see that? You can see key levels. See bands here. So look at sell here, look at sell here, look at sell here, look at sell, buy, sell, stuff like that. You can go to lower time frame, maybe 1 hour. So you can check, okay, it's telling you, oh, it's on the heavy resistance, stuff like that. Now, so the same thing on stock, local, international stock, and all of that. Let me take one of the stock I've always been scalping. It's called RKT. It's a foreign stock. You can see now, see that. I was telling some persons we bought it. When I bought here, I sold at $25. All right. I told them, oh, buy, sell at $25. No, 21 point something dollars. So can so look at it. So that means so after a buy here, you move up here, you come back again, it gets supported. And so you can see that, oh, the resistance are not too strong. The support are more stronger. You have a lot of support and all of that. That's what we call key levels. So it's very fantastic, right? Then we look at local stock like Nigerian stock and all of that. So let me go to PZ. Let me go to, because we trade, we trade everything. We trade commodities. We buy, okay, look at PZ. It's still showing that this is a very strong support and all of that. Let me look at Fitsin, that's a local stock. Fitsin Healthcare. You see that? Okay, so look at where it bounced from. You wish you were here, you will have bought. You wish you were here, you will have bought. Do you understand? This is stock. Stanbic IBTC 30. Okay, okay. I was telling some person that it's going to crash more. You see that was crashing. The other day was 4,700. And I say, okay, probably we're going to be waiting here. But the real, I did, come down to this. Well, there are other minor support. But imagine where if you're able to have a scanner that's going to give you a buy here and all this one up as you go. Do you understand? That's one of the lovely thing about. So first holding. Okay, just showing you the importance, okay, the importance of having a scanner. Look at the support here. Now you bought from support. Very nice, right? Good. You will have bought at 40 naira or 41 naira, and then you can sell. Look at the minor resistance here at 49, 15 naira, and all of that. You're in money. So you don't need to overstress yourself to want to trade and all of that. So that's number one. This is one of our foundational scanner. Then we have the other scanner. So I just want to show you all of those scanner. Then we have the other scanner. This is the second one. Of course, that is similar to that other one, right? This one is called demand, right? Demand zone and supply zone. So that, you see that? So demand zone and supply zone. Now you can see how the trade happened from here. Of course, approaching that, maybe there was a fair value gap somewhere here, and then it respected that, and then the market rallied up and get to a minor supply zone, and it sold down, then bought up again, and then it got over here, sold down. But I think the strength to bounce up was much. That's why we have a demand zone here. So with this demand zone make it a lot of sense. So that means this market is going to break and continue going up. That's what it means. Maybe to go and get rejected here. But someone who is scalping will have scalp and make money here. But someone who is doing swing trade will not recognize anything here because he had bought here. He's only waiting after all because the market has moved so much and he was only waiting to see how the market delivered to this point. This is one of it. Then if I go to gold, the same thing, you're going to find that the same way. Can you see that gold? Look at the resistance, which is a supply zone, right? Then look at the demand zone where it bought from. So take oil, anything, any instrument at all. Look at demand zone, look at supply zone. It boils to go up. These are like kind of normal scalping and all of those things there, right? Look at Bitcoin. So look at Bitcoin. So look at it, the demand zone, supply. That means we get here, we could have a resistance and then we could sell down again. So we put you through how to actually apply all of those things just to let you know. Okay, you can see here, supply, rejection, and then the market was crashing down. Do you understand? So that's how lovely. And then so look at crypto, the same thing. Then you look at stock again, it's still going to be the same thing. A lot of that. You can take a trade, and then you'll be fine, making a lot of money and helping yourself as much as possible. Okay, so these are. Then the next we have is okay, actually we said here, let's look at the next one in the hierarchical order, the way we do it, that you can start from. So again, the smart money concept. Okay, so let's look at smart money concept. We have variety of smart money concept. Look at it. Those of you who trade smart money concept. So most of the predominant thing in smart money concept are probably look at it. Most of the predominant thing about in smart money concept, number one is called order block. So you have more of order block. Those ones are very important. We have fair value gap, FEG. You have BOS, okay, BOS. You have MSS, okay. You have, okay, so this other block, I always call them block. Other block, we have breaker block, BRB. We have rejection block, okay. Okay, they are all block. Okay, rejection block, okay. Yeah, block, okay. Yeah, so then we have other things like, okay, yeah. So MSS, these are the most predominant thing you need to know and learn so much as possible. Other block. So there are other few things you want to use, like I say Fibonacci retracement is a much used thing for you, which you're going to be talking about the PDRAs, okay? PDRAs. Okay, all of these things are very important. Liquidity, buy side, sell side liquidity, but the predominant one you need to know are actually this, okay? So order block, break up structure and all of that. So now, if you look at it, this one, all this paint you are seeing here, they are order blocks. So it's simplified for you. You can learn basic, but you don't know how to plot them. It plot them out for you. These are order block. You see this one that is here. is called a breakout block. So meaning if gold is going to come here, you're expecting probably a bounce from here, which is about 4887, and then so you know where to enter from. Now it's on another block, which is a bearish order block. Now, if this market need to reject from here, that's what you're telling you. That's what you're telling us, and all of that. Now this is change of character. All right, change of character. So you now have this one that is a fair value gap. You can see that the market tapped into the fair value gap and bought up again. If you're scalping, you will have made a lot of money there. Not everybody will see that. Okay, you can see yours, right? This is a fair value gap. Okay, it's supposed to come down, break the structure, but it's a fair value gap. You tap into it and then you buy. This is already much money because gold has so much volume, but not everyone actually have that understanding. So this is a smart money concept that we use. Then we have a hybrid strategy, and so the hybrid strategy have work with it's just like so this is price action, purely price action. But of course, you can't talk about price action without still talking about liquidity and all of that, and then support and resistance and all of that. So that's what this one is. So if you are, a very disciplined trader who want to look at the chart and all of that, this helps you to look at, region by region. So similar to smart money, but this is more like. Then we have trends. It's okay. I think these are then the powerful one. If you are a gold trader, you scalp and all of that. This is psychological. That's what we call institutional grid level. Institutional grid level. So these are institutional grid level. Now, if you want to scalp, look at the powerful thing here. This is the most powerful if you're a gold trader and crypto trader, Bitcoin. If you're a gold trader on Bitcoin, you are scalping it. This is the best for you. You don't need to go for any other one. This is just the best for you because, let me tell you what it does. It helps you to identify a kind of resistance and support, but that's a dynamic support and resistance. It's not just a support and resistance because support and resistance is a zone, but this one is a round number. Okay, so that's the difference. Okay, so what we do is you can see that this market is buying because of our scanner. So, and then you see this one from this level to this one is 100 pips. And that's what it is. So that's the basic thing. Then the third thing I need to put you through now, so pay attention, is the last thing, and I'm going to go for how to take trade with this, which I'm not going to go detail about. So I only do example with this. Now, this is, first of all, I need to understand the trend. That's why I give you the basic of what the trend is all about and then understand structure. Now, if that is the goal thing, and I want to be trading, if you see what this thing is doing massive money. Now, you see that the market actually got up here and rejected at that psychological level. Can you see that? It has rejected about 3 times now. First rejection, and then this is a signal for me. It says to sell. Now, what we target is that since from here to here is 100 pips, this scanner, particularly scalping gold, we target minimum of 50 pips and in multiples. So if you take 50 pips and room is still there, take another 50 pips in that order. So when the signal came up now, you can see if I enter short, this confirmation here, and then my stop loss can be anywhere just to build and protect my account. So if I come down here, if you look at it to this point, it's already 60 pips. Okay, it's already 60 pips. So that's already more than, all right, that's already more than 50 pips we're targeting. Fantastic. You have taken the trade, you're taking the profit. Now the market continue again, right? You still have a position left, right? But the market return back again. Look at another rejection, even though it's like, what do we call it? So doji, but it gives you a signal, rejection, and then so let's say you're selling this market. So your stop loss is the same where that one was, but this one now you make more profit back to this point again. You can see that the way the market was ranging for a while at those points, that was too much. Okay. Then the same thing, the market continue again. Now, you rally down here, probably you have taken your profit here, it's not a problem. You give you another signal. You perhaps may not take this one because we always say, okay, let this engulfing candle closes above this one. Now, if that condition, you may not take. Well, look at another power one. So look at it here, power 3, here, here, here. Then they are taking here. Then that's talking of entry the bucket. And then you are saying, hey. Where is it? Oh, okay. So, and it's even more crazy. Okay, yeah, here, this one. Then stop loss, you have to go below this previous swing point. Then targeting 50 pips already done here. And then the next 100 pips already done here. Can you see that? Now, after I did this, a pullback into the institutional grid level, and then that's the point. And then at the end of it, if you want to still take the trade, because it's Kappa are not dull people. It's Kappa move very fast. As it's hot, they're taking the money. So this is another 60 pips. and then the market gets another rejection. So this rejection, look at this close of this candle, then look at it, taking the trade here on this point here, then you have a stop loss, of course, above the wick, and then your first take profit is 50 pips. Okay, so this one has done the 50 pips, but definitely I know most of us will always target the next internal grid level, and that's one of the things. So this is how you take this trade. You are just in charge of your market and making as much money as you want to make. Do you get that? So it doesn't matter. The market is going to present to you as much money as you want to make. And now, so this one, it's another fantastic one. If you look at it, now let me show you something. This one traded as this market was choppy, people will be complaining. Let me show you what it did. For about how many days this thing have been choppy? Can you see a buy and sell opportunity? So look at the support level. So all I wait for, the market that give a signal, you confirm your signal. Okay, that's the way we confirm it. Now this one I'll give it again, even when you are still waiting, it's already given an entry. And then look at it. It was doing 50, 20, 30, 40 pips and all of that. Look at another sell, look at another buy, look at another sell, look at another buy. All right. Now, this is a rejection part. Your scanner didn't give you a sell, but so maybe you want to wait for it to give you a sell. So you sell or call, and then travel back again, another buy, another sell, another buy. Okay, then another sell. You get it? I have a sell position that is still opening, and I don't know why this is a jump here. Maybe there was a news in other kind of a listing. So if you go back to this gold now, so this gold has finally delivered for the people. Can you see that? This is how this scanner work as massive as possible. So every other ones there, you can see how we actually use them. So now look at for Bitcoin. So look at for Bitcoin a buy here. Now it's saying sell, but that's not yet confirmed because we have rules of confirmation. Now look at it. This is the signal. Now this didn't close above here. So conservative trader is going to wait and say, hey, Bitcoin, what do you want to do? I want to scalp hell out of you. And then here, the close of this candle, and then the stop loss below. Okay, so the stop loss below 8. That's just 400 point, 404 point. Now, if you target here, what we target on Bitcoin is 500 points. So this is not up to 500. That means your next target will be here. That's about 806 points. And then if you use one standard lot, that's $800 plus. If you use whatever, so you just know what to do, then this market has confirmed. Now here it's saying this, the signal is not yet confirmed. You are already out and then watching what shall I do next and all that. If you have another position that's opening, you're only just trailing the market and watch what is going to happen to the market as much as possible. Ladies and gentlemen, this is how our scanner actually works. You make money if you obey the rule and as simple as possible. Does that make sense? You can see the gold now. This is a very powerful thing. So when you come in, we put you more detail about time synchronization and all that, because you can see I'm scalping on 1 minute, I extend to another higher time frame and all of that. This is how as powerful as this tool is. So thank you very much for listening. And I'm sure if you go through the script, you're going to understand why we recommend PBS market scanner for everybody. Everybody, either you're a professional, you're a beginner, you need it. Because that's part of leverage. You are leveraging not to give yourself to be on the chart all the time, trying to scan down, scan up, and all of that. You just come in, you have something that's going to tell you, then it even help you to what to look out for as fast as possible. And that's how it is. So go to the group. So we have on the comment section, you will see our group link there, both WhatsApp and Telegram. You can join us, ask questions. If you want to ask direct questions from some experts, just chat on this phone number. So write it down. It's a WhatsApp chat, don't call. +234 90 470 44 and 998. I take the number again, +234 90 470 44 and 998. That's the number you can chat with and all of that. So on the comment section, there is a link for the group, both Telegram and WhatsApp, so that you can join. Thank you very much, and you are blessed. This is Plan B Express. Together we rise. Have a nice time. Don't waste time. A time used in checking time is a waste of time. A slacker may be a loser. Don't be a loser. Stand up now and take advantage of this opportunity. Do have a nice time and bye for now.